Inflation rates have hit 40-year highs, and that's not only driving up prices for consumer goods, but it's eating into a lot of corporate profit margins. And the current moment that we're in is leaving a lot of investors wondering if they should reposition their portfolio or do they just leave things alone and ride out this inflationary wave. If you've been asking yourself these questions, well, we may have some answers for you. I talked to IBD senior editor Mike Molinski, who recently analyzed a number of stocks and sectors that have been working and not working so well in the current inflationary environment. Take a look. Well, can you just set some context for us right now of what we're seeing with inflation levels at the moment?
So inflation for the past year has been rising. Inflation has been it's been over 3% for a year now. One of the things that we're in right now is called stagflation, which means inflation is going up, productivity is going down or could be going down, and wages are not keeping up with prices. So at some point, we could enter stagflation and enter a recession. So if that happens, I mean, obviously that's not good for consumers, but it's also not good for the stock market because, you know, inflation is going to keep rising and inflation is going to stay above the 3% level that we'd like to see.
So, can you talk a little bit then for people that may be wanting to reposition their portfolio to ride this inflationary wave out? What are some of the buckets or the industry groups or sectors that are actually working right now?
Right now, energy is where it's been working for the past few months, and as long as inflation keeps going up and keeps rising, energy should be favorable. And REITs as well, equity real estate investment trusts. And to a lesser extent, precious metals, gold, and mining. But with precious metals and gold and mining, you have to take into account also they're very volatile. So energy and REITs are less volatile, and precious metals are more volatile.
Yeah, and those seem to be a lot of the names that have been popping up on IBD Live, at least. And, I know you did a lot of research as well, looking into a lot of the areas that aren't working. And I think for a lot of people that follow us, a lot of the growth
Yeah.
investors, it's been really tough out there. So maybe can you talk about some of the areas that are getting hit with the higher rates of inflation?
Well, technology and consumer discretionary stocks are the two most sectors that are being hit right now. And as long as inflation continues to rise, they should be continue to be hurt. But you have to take into effect that how long we expect inflation to rise, to keep rising. I mean, the ballpark range that most economists expect inflation to hit a peak somewhere during the summer. So I personally think it's going to last throughout the year.
We'll have to wait. But what other stocks or groups do you think could act as a buffer to this inflationary moment?
Again, value stocks and financial stocks, healthcare stocks are technically a buffer to inflation, in addition, obviously, to energy and REITs, and to some extent, precious metals and gold. Value stocks and also dividend stocks, especially long-term leaders for dividend stocks, dividend aristocrats. There's an ETF called the S&P Dividend Aristocrats. Investing in those, outperforming the market and have been for the past several months. So I do expect that to continue as long as inflation is rising.
Hey everyone, thank you so much for watching. You can hit the subscribe button to get more content like this and leave your feedback in the comment section below. We'll see you next time.